Hi, I'm Joe Connolly, and I want to introduce you to somebody who has done very well at making a newsletter a profitable business. How about that? Reza Chowdhury is the founder of AlleyWatch, the pulse of New York tech. The company, in large part, is a startup funding report that comes out every day. Then Reza spins other businesses off of that as well. But it is a window into the entire tech industry, and it's about where investors' money is flowing as a sign of what's growing and where the interest is moving to. So, Reza, number one, where's the money flowing right now?
Hi, Joe. Great to be here. The pandemic, the last time we spoke in early 2020 before the world changed, we had just briefly chatted about, there would be a rush to digital adoption. And I didn't realize at the time that it would be so fast. So what we're seeing now is, for obvious reasons, in-person activity is not as possible as it once was, in a pre-pandemic world. So the main beneficiaries of this have been, obviously you're seeing in restaurants QR codes, but there's been a lot of money flowing into specifically the restaurant industry and the food industry, which is a bit surprising because that's one of the businesses that are, most challenged by the pandemic. But there's been an increase in really infrastructure technology. So some of the things that you're seeing support the QR codes for the menus, contactless payments. So that's just one aspect at the sort of the front of the house and back of the house for restaurants. But, there's been a large portion of the restaurant industry that's been, affected by this pandemic laid off. So there's new platforms that are emerging that are giving people the opportunity to build their own businesses. So for example, there's some platforms where chefs can have their delivery services. So their restaurants are now closed, but these chefs still need to make money. So they're offering door-to-door delivery services. And also to support this, there's some ghost kitchens where chefs are able to actually prepare these meals and not take on sort of the overhead of launching their own restaurants, but they're able to come into these sort of communal spaces, similar to like a co-working space, but co-working space for chefs. So that's one aspect that we've seen. Another aspect has been really in the digital health space. So obviously the pandemic has brought to the forefront the importance of health, but you've been accustomed to going to the doctor for many years and not actually visiting with your doctor on the internet. So what has happened now is that has become more sort of accepting. Maybe in a previous world, you would kind of, speak with the doctor and get access to maybe Viagra or something where you didn't want to go into the doctor for. But now, everything ranging from your primary care visit to mental health services to maybe even alcohol, treatment is being done over the internet. And there's been a more readiness of adoption for this.
That seems to have, go ahead,
yeah.
Go ahead.
And really the last thing that I've seen is because there's been this huge wave of, everyone moving to digital, this also introduces a lot of challenges for businesses. Normal businesses would have massive IT departments, or small businesses would have IT departments to kind of manage employees and their devices. Now that these employees are working out of their homes and accessing these things through their personal devices, this presents a huge cybersecurity challenge because exponential number of new devices are entering into a company's network. Customer data is now being in places that it never was before. So there's been a huge explosion in the number of companies that are securing businesses and making sure that they can, adapt and work in a remote world.
In addition, then, very interesting, to food services, healthcare, and cybersecurity, where are the areas that tech firm owners who may not be at the point yet where they're about to start raising money, but they're working and they're growing, where are the opportunities that you think they should be looking at are?
I think, there's been an importance kind of rebalancing of sort of economics for the entrepreneurs. One of the things that I would recommend as, a founder that's starting a business is it's never been easier to cultivate relationships with investors and venture capitalists. Previously, you'd have to have coffee meetings, have to have in-person meetings, you'd have to chase them down at events. And the VCs themselves are saying that they're much more accessible now in this remote world. And the funding numbers actually show that they've been funding more companies when you feel like there would be a pullback. So, the economic shift has introduced some opportunities. So there is this new, total addressable market of people that were never digital before, that can be, catering to their services. At a more sort of grassroots and more nuts and bolts in-person level, rents in New York on the commercial side has never been cheaper before. The businesses that have survived have really, in an interesting exercise of, elasticity of demand, in many cases have raised their prices because they have less demand. And this is, a real paradox when it comes to economics, just because they don't have the demand that they have and they need to survive. When things open up, new entrants will be able to enter because they necessarily, the demand will rise. And in addition to that, they'll be able to come in with, some sort of advantage in the sense that, they're paying cheaper rent. And there's also people that have been, really holding the purse strings very tight during this pandemic that will now loosen those purse strings and start, there'll be much more consumption of consumer goods in the future.
So are you saying then that if you're newly coming onto the scene and your business has not been down like many other businesses has been, that you may now be able to come in and underprice the incumbents who've had to raise their prices just to stay open? Do I understand you correctly?
Yes, I think that, there's been cases where, I'll give you just a simple example, a $3 cookie pre-pandemic is now $8. And yes, costs have increased, but people's incomes have not really increased from 3 to 8 for the most part. But this person now understands with their less in demand, this is where we need to get this to $8 to kind of keep the lights on or do the best we can to keep the lights on. But eventually when demand returns, and now from a consumer sort of standpoint, I'm willing to pay the $8 because I'm not consuming as many cookies. Just during the pandemic, I'm not going out and about as much. But when things return to normal, I'm not going to be willing to pay $8 for that cookie. So there's going to be an interesting sort of battle here of, will prices come down? And this is, specifically related really to the food and beverage sector and restaurants, because, the cost of restaurants have gone up. I've noticed that from a consumer sort of standpoint. So there's going to be a battle of, there's empty space, rent is going to be cheaper. So someone's going to be able to maybe offer that cookie for $4. And now is the $8 cookie seller going to sell it for $4?
That one's not in the economic textbooks, I don't believe.
Yeah, it's definitely not.
Wow. Producer Neil A. Carousso always joins us on these discussions as well. Neil.
Joe and Reza, it's interesting your perspective on this. What would you say those incumbents that Joe talked about, those traditional businesses, how are they using certain tools to improve, to, grow again?
Yeah, I think it's really been that rapid digital adoption. There's a number of businesses that relied on in-person, and they never really thought about embracing the web. The web was really more of a lead generation tool, but they never really thought about embracing the web where that would be the primary sort of channel for them. Or if they did, this would be at a place maybe somewhere 2 or 3 years down the roadmap, and they wanted to do, have these in-person locations, and especially if it's a business that's very consumer friendly, having these physical locations is really a footprint for them, and in many cases serves as an advertising tool for them. People are able to come in and say if it's a mattress retailer or it's a cosmetics retailer, people are able to come into the store and actually test these products out and not look at pictures. So, a lot of these businesses have been able to grow by kind of, transferring that experience into just aside from pictures, but there's a bit of storytelling involved to get people interested in these products at a digital level. At the end of the day, if you're buying a mattress, most people are going to want to test it out, but this constraint of not having this in-person activity really forced people to storytell and convey the value of their product from a digital perspective.
So what would you recommend in terms of storytelling? What is working for a traditional owner that people might test a product? How do you portray that online?
customer stories, the importance of customer stories and reviews have been really important. So you can actually, speak to some person who might have had the similar hesitation of purchasing or making a purchasing decision in a digital realm that actually ordered the product and got to a place where they're comfortable now recommending the product. So, turning these customers into ambassadors in a tacit way has been really important. And also addressing, I look at the example of my family. My parents, my father's in his 70s, my mother's in her 60s, and they never have purchased anything online. Prior to the pandemic, they still haven't purchased anything online. They're coming to me and being like, "Hey, I need this," but they're actually now shopping online per se. So addressing people that have never purchased anything online is a great way to kind of increase the size of your market, because these are consumers now that are less reticent, I would say, to make this decision online, because they don't want to be going into the stores. They don't want to have contact with other people. And this behavior, I don't think, will fully go back to 100% in person. People have seen the convenience of, getting a product and not having to carry and lug it back from the supermarket or from the store, and just shows up. A couple of clicks, you put your credit card number in. And so there's a whole new market of people that are comfortable with e-commerce now.
Right.
Will the New York tech firms, from what you're seeing, work almost entirely remotely? That's what they were saying early in the pandemic, the ones I spoke with. Are they starting to come back to the office? Do you think that they will continue to use far less office space, or even just meet together someplace a couple times a month? What are you hearing?
So I think there will be obviously a transition. I don't think we'll go back to a full, every employee will be at the office 5 times a week. But I don't think we're also at the polar opposite, where these companies successfully will be able to operate completely remotely. Just because, especially at the beginning stages of a startup, and when you have that small team, that in-person organic activity and huddling around a whiteboard and sitting in a conference room can't be really replicated through these technologies. One of the interesting things that I'm seeing is there's really a push towards a hub and spoke model in many cases, or a hub model. So say a company employs 100 employees, they might get, a space in their next lease for 50 employees, and essentially use a conference room booking system to allocate the space amongst the team that wants to be in the office on particular days. So it's a better use of space. It reduces their sort of rental cost footprint, but also with the way costs of real estate has precipitously fallen, some companies are just getting as big a space as they can, because in the anticipation that they're going to grow and they're not going to get this deal of the century. I think, for larger companies where a culture has already been established, it's easier to operate fully remotely. But for smaller companies, I say less than 10 employees, less than 15 employees, they want that in-person sort of activity. And for that reason, the companies that I've personally seen that are going back to work tend to be on the smaller side. The ones that are, 10 person above, 50 person and above, are a little bit more cautious. And I think it's also from a policy and risk perspective, they necessarily don't want to be taking that risk yet. But things will change, as more and more people get vaccinated. I think all employers want their employees back in the office. So
now, when we first met a year and a half ago, you, I believe, had a small number of employees. Have you hired? Tell us about your business, Reza.
We've maintained the same headcount and kind of slow and steady. We're not making hiring decisions right now. Part of it is because we have a small team, a lot of our training process needs to be done in person. It's just really learning on the go, and doing it remotely has just not, it's just not as efficient and it's not as effective.
What is your headcount, Reza? What is your headcount?
We have a team of 6, but we've also had some employees that previously, prior to the pandemic, were remote. We have a globally distributed team. Some of our writers check into the office. So the transition for them was not necessarily difficult or novel in any way. They've already been doing this work. But I've seen that, certain things from an efficiency standpoint are not as efficient because we're not in person.
And Reza, you're in a shared working space, correct?
That is correct.
So that was a big movement towards the culture of the city. These were going to be huge. What's it like there? Can you tell us kind of what's going on behind you?
Yeah. Today it's a Monday morning. People normally show up around 10 o'clock, so they're starting to stumble into the office. From April till I'd say September, for the majority of it, it was myself and another individual who doesn't work at my company. And then post-September, people started strolling in. Last week, I saw the most number of people like on my floor that I've seen over the last 12 months. But again, the people that are coming in tend to be companies that are under 5 employees. And the people that are coming in are maybe 1 to 2 of those 5 employees are coming in. So these are mixed teams. Any company that's larger on my floor has not been coming in at all. Maybe they check in once a month to really just pick up the rent and kind of collect checks and pay bills, but that's about it. And from a larger sort of standpoint, with co-working in general being the future, there's been a tremendous consolidation. A lot of these places have closed. A lot of them have been taken over. And, co-working will have its place to give people the flexibility in the sense that they no longer have to have these onerous leases and 5-6 year leases. And if their teams are kind of scaling in and out quickly and just have a centralized place. But also at the same time, co-working, I think, is the first thing to go in a tighter economy because I could do this work from home and it's, physically safer.
So with what you described about what's happening at your floor, just to give us a handle, there are more people than there had been. What percent of the people are there now as opposed to pre-pandemic on your floor?
Pre-pandemic, we'd pretty much have 95%. Some person's not coming in on a daily basis because they're traveling, because, people are running around. Today, I would say we're lucky, even with the most number of people, it's 40%. Well,
we had been hearing 15 and 20, so that is creeping up. When I look at your website, Reza, I'm amazed that with 6 staffers, you can offer as many services that you do. You break out information by industry, education, healthcare, fashion. You have events. You have Alley Talk. Anybody can look at your website. What is the website? Just tell us. AlleyWatch.com?
AlleyWatch.com. AlleyWatch.com.
So you look at AlleyWatch.com, and it does look to me like you'd have 25 or 30 employees. How do you do this?
So, we had chatted about automation a little bit. So we were kind of interested in, when building the site, to kind of automate as much as possible. Again, I don't have a traditional media background. So looking at these things, and given that the fact that we're focused on the tech industry, we're allowed to experiment with the types of content that we present. We're not writing Pulitzer Prize winning journalism, but nor do we need to for our audience. We have to convey the information in the most efficient way possible. So, when we were building the company and building the systems, and even till this day, a lot of what we did was looking at specific ways where we can use technology to build a enduring platform rather than just having people chasing stories and writing 30, 50 stories a day. If we can build a system that helps us write stories faster, is really the mantra that allows us to maintain a lean staff. Our editorial staff is really a team of 2. The other 4 employees are doing, some business related, research related, technical things to support this. So, we've built that really lean team, and, really following in the startup mantra, we want to just be as lean as possible. So it's not necessarily a matter of hiring journalists, to exponentially increase the number of stories we can do. We rather make an investment in technology to help, the staff that we have just do more faster.
to catch the information and get it out there. And then if you
That's
want
correct.
more on it, you can pursue it yourself, as opposed to you having 10 people getting every last detail about many of the items.
Yeah, our audience is, they're millions of impetuses of information are vying for their attention. Not to generally characterize, but there's a large percentage of ADD, ADHD within our audience. So we have to capture their attention very quickly and in a way where they're able to just consume that information and move on to whatever they're working on and whatever they're building.
We
want to cater to that need. Yeah, and we want to cater to that need.
So what digital tools are you using, or would you suggest for owners who are told, increase your digital content, get content out there, pump it out, find your customers? What tools are there?
So this is going to be industry specific because you want to kind of fish in the ponds where your audience is. So, there could be trade journals similar to my publication. There could be social, networks. There could be groups. People's attention has moved to that digital realm. So really understanding where your audience is spending time and using some tools, research tools to really understand where your audience is and kind of addressing their pain points. So I came across a technology that basically was for financial advisors, where it would track on social media people complaining about their financial advisors. So it was a very shrewd sort of use case. But once this goes out, the first guy that was able to capture this, or first person that was able to capture this, and said, "Hey, I understand you're dissatisfied with your financial advisor. Maybe you should take a look at what we do. I'd love to chat with you." So it became an interesting lead generation tool. So general advice I would give is to, the thing with digital is it's not like building a board game where you build it once, it's in stores, and you can't adapt it. So I would say, as you're first starting out with these digital tools, to invest a very small amount into a variety of different tools. You're going to get really an instant feedback mechanism and feedback loop from these tools. This worked, this didn't work, because the beauty of digital is you can attribute this to where the lead came from. You can ask your customer, how did you hear about us? So similar to this sort of marketing, this online marketing, you have these, tracking tools, and then invest your, remainder budget in things that have performed well. So you're making that data-driven decision.
Very interesting.
Wow.
Any advice, just to wrap up, as to how people could monetize a blog or a newsletter that they do, which can become very onerous if you're going to do it even more than once a week? It can take over your life. Substack and all of these places. Any advice on building your business or your revenues through those, Reza?
Yeah. So, Substack has become a great tool, but now there's going to be exponential number of Substacks that are coming out, whereas the monetization opportunities are not going to be exponentially increasing. So you have to be a little bit cautious of just building the business on these traditional sort of models. So looking at, we've run basically a newsletter that's monetized for over 7 years now. So we're not new into this foray, and it's difficult to, I'm not going to say it's easy to monetize these assets. Advertising is a difficult business. But if you have a compelling product with a compelling audience, where the audience, what they're interested in, it's easier to sort of monetize. So you can monetize from day one your blog by simply just putting in AdSense for Google AdWords. You're never going to make enough money to support yourself as a new blog doing that, but you'll be able to, collect some data points that will help you understand these are the types of advertisers that actually work on my platform. So use that data to make these direct deals. In advertising, you have to make these sort of direct deals. Relying on these ad networks is not going to be sustainable from you in the longer term. But if you're also doing this on the side and you have an everyday job and you're looking to build your personal brand, it helps you pay for maybe the infrastructure of keeping the newsletter alive. Last question. What is your 3 or 5 year plan for AlleyWatch? What will you do with your business, Reza? What's your growth plan? With our growth plan, we've been fortunate beneficiaries of the pandemic in the sense that, you know, a lot of attention has moved to digital. People want to be connected to what's happening in tech, and conversations that were happening at water coolers about this company got funded now are going through AlleyWatch and social media and some other news publications. So we'll continue to sort of grow out the presence in New York. I'm extremely surprised that the funding has continued at such a brisk pace in New York. So we'll hopefully be beneficiaries of this growing ecosystem. I think, you know, I had alluded to this earlier. There was a, you know, massive fall in rents. This is going to attract people that previously did not want to build an office in New York and did not want to pay rent in New York because of cost. Now it's a win-win proposition for them because the costs have fallen 20 to 30% on average. So there's going to be a new wave of participants in this tech ecosystem. So we're going to have new companies to cover. 3 to 5 years from now, we'll sell the company maybe. But in the interim, we will continue expanding and also move into different markets. The world has gotten flatter. So we're constantly monitoring these other markets, but New York will remain the central focus for us. And we're really excited. We're also going to get a new mayor, and we think the next mayor is going to really understand the importance of the tech ecosystem and might be a little bit more supportive. So we're excited about a confluence of factors that will continue this growth of tech in New York.
Reza, it's a joy to talk to you, to hear you talk about growth and opportunities, isn't it, Neil?
It's great. And Reza, it's so great to catch up with you and hear your perspective on all this.
Thank you very much.
It's been a pleasure. Thank you.